Hi, everyone. Thanks for joining us today. My name is Karen Alexander. I'm with the Invasive Species Center, and I will be facilitating today's session. So we're just 1 minute, actually it's 11 o'clock now. So we'll just get going, and I'm sure additional attendees may trickle in, but we do have a full hour planned, so we'll get going. What we're going to do today is have everyone who's joining in the audience is automatically muted. So we will be encouraging discussion after the presentations, but feel free to put your questions in the chat or the Q&A function as we go, and then we'll certainly address questions later on in the session. You can also use the raise hand function and I can unmute you, and that will allow us to have more of a discussion, which we're really looking forward to having today. We are recording the webinar, just so you're aware, and we'll be sending out a link of the recorded presentation session. We'll likely chop the discussion piece out of that recording that will get distributed. And then please keep an eye out on your email after our session today, as there'll be a post-event survey. We may not get to all the questions, or there may be comments that you wish to pass along to us without doing so in the discussion session, and that's your opportunity to do that. So with those few things said, again, welcome everyone to our webinar. My name is Karen Alexander. I'm with the Invasive Species Center, and I will pass it along to Sarah Rang to get us going. Thanks.
Thanks, Karen, and welcome everyone and to the webinar today. Today we're going to be talking about novel approaches to financing invasive species, in particular Phragmites. So welcome, and we'll do a two-part presentation this morning. I'll speak for a little bit and then hand it over to my colleague from Quantified Ventures. And we'll dive a bit more into the sort of conservation finance part of the agenda. So very much looking forward to hearing your thoughts and ideas as well as we move forward. It really is designed to spark some discussion and ideas, and we are very much looking forward to your feedback. Also wanted to acknowledge Eric Cleland, who has joined us from Nature Conservancy Canada, who has been a vital part of this effort as well. So if you wouldn't mind advancing the slides, Karen, that would be great. We'll get started. We usually like to try and start with a land acknowledgement, and we just acknowledge that the Invasive Species Center is in Sault Ste. Marie, Ontario, which is the traditional territory of the Anishinaabe peoples, part of the Robinson-Huron Treaty Area. And just wanted to recognize the long history of the First Nations and Métis people in Ontario, and show respect to those First Nation and Métis people today. We also work quite closely with some neighboring organizations and communities, the Batchewana and Garden River nations as well. So particular thank you to them. Next slide, please, Karen. This just gives you a sense of where we're going together today. We'll do a brief intro. We'll move pretty quickly through a lot of this because many of you are very familiar with Phragmites, and spend the bulk of our time talking about the financing aspect and also the discussion. So just to do some introductions for yourself, these are the partners that have been involved in the project. There's a group of us today from the Invasive Species Center. My name is Sarah Rang. I'm the Executive Director of the Invasive Species Center, but Colin Casson has joined us, and also Karen Alexander. We are coordinating this effort, but really it is a team collaborative effort. It's joined with Ben Cohen, who you'll see from Quantified Ventures. They're providing the sort of brain ideas in terms of the financing aspect of this. We're also very grateful for support from the Conference in Great Lakes and St. Lawrence Governors and Premiers Association, who have a very active aquatic invasive species program and have helped support many of these efforts. And we're also joined with Eric Cleland and some of his team from the Nature Conservancy of Canada. They're Canada's leading national land conservation organization, and they're partnering in this effort with a lot of knowledge on Phragmites and also conservation finance as well. So that's the team to date. We are always looking for new partners and new ideas. So if you'd like to join with us, we can talk a little bit more about that in the discussion stage. Just a brief overview of Phrag, and we'll go pretty quickly. Phragmites, as you know, is an invasive species. It's a plant that grows in many of our wetlands along the ditches of our highways. It is present across most of the Great Lakes Basin. We're looking at it really from a triple lens, the ecological lens in terms of some of the damage that we've seen it do to wetlands, also an economic lens, what's the impacts in terms of a variety of different sectors, and also sort of a cultural social lens in terms of how does it impact some of our recreational use and also some of our traditional uses from First Nations communities as well. So we've taken a broad look at Phragmites and really tried to figure out the impacts on a lot of different sectors as well. So these are some of the work that we've been doing under the Green Shovels Collaborative, which again is a collaborative group of sort of leading conservation organizations that share an interest in invasive species. So we're joined there with the Ontario Federation of Anglers and Hunters, the Federation of Ontario Cottagers Associations, Nature Conservancy, ourselves. And we've been working together as a team on invasive species. And so one part of this is about Phragmites. So we have worked on a strategic framework for coordinated management of Phragmites, and that's work that's led by Eric Cleland and the Nature Conservancy of Canada, recognizing that each one of us has a little piece of the Phragmites puzzle and trying to put it together in terms of a comprehensive vision for collaborative action on Phragmites. Again, at a provincial scale, using prioritized actions and regional implementation. We've also been delighted to able to support many of the good work that's going on across Ontario through the Invasive Phragmites Control Fund. We have been distributing support funds for a variety of different communities to help them and recognize their amazing efforts that they've been doing over the years. We've also worked a little bit on a preliminary cost benefit analysis, trying to assess both the costs and the benefits of Phragmites control in Ontario, and using this effort as a way to build the business case for investment. So all that work is at our greenshovels.ca website. Welcome your thoughts and feedback on those. And I'd just like to acknowledge the funding support from the Ontario provincial government through the Ministry of Northern Development, Mines, Natural Resources and Forestry, which has helped support many of these efforts as well. So this is the last in a series of webinars that we've been doing, highlighting this new and novel idea of how can we use conservation finance to help us fund some invasive species actions, particularly on Phragmites. I'll turn it over to Ben now from Quantified Ventures, who will take us through the rest of the presentation and focus a little bit on the financing side. If you have any questions, we can certainly pick those up in the discussion as well. Many thanks. Over to you, Ben.
Great, thanks so much, Sarah. So as Sarah mentioned, my name is Ben Cohen. I work with a company called Quantified Ventures. We're a conservation finance firm, and we work with governments, the private sector, nonprofits, and community organizations to find new ways to bring innovative and new and diverse sources of funding and financing to support projects across environmental issue areas, as well as health and social issue areas that perhaps lacked access to funding or financing previously. And we do that, particularly through an approach that we call outcomes-based financing, which we'll get into in a little bit. But essentially, we're trying to look at the full range of environmental, social, health, economic benefits that can come from these programs, to find new sources of capital to help fund or make an investment case to support these important projects. So just to sort of give an overview of the work that we've been doing together with the Invasive Species Center and NCC and Great Lakes St. Lawrence Governors and Premiers Association, we are focusing in this first phase in Ontario. I know some of you may be coming from outside of the province, but also wanted to say at the outset that we're starting in Ontario, but we're definitely keenly interested in perhaps applicability or compellingness of this approach to other provinces within Canada, as well as US states that are facing similar issues with invasive Phragmites populations. So our work together is to promote and structure an outcomes-based financing approach to scale projects that address invasive Phragmites in Ontario, fostering the province's goal of becoming frag-free by 2033. So as part of that, we've been working with ISC to describe an optimal program to control, eradicate, and prevent Phragmites populations, including identifying key geographies in Ontario to target for program implementation and defining measures needed to make a significant impact in these locations. And then our work comes in being able to quantitatively estimate the costs and the benefits of the program that can then help create a funding or financing strategy and structure that aligns the goals and needs of the expected beneficiaries of the program. So before we get into our work and how we've used this approach elsewhere, on the next slide, wanted to just start off by giving an overview of, sorry, I didn't realize I was me in control, by giving an overview of what we mean by conservation and outcomes-based finance. And this may be familiar to some of you, but maybe others of you are sort of, maybe this is still a little bit mystified, and I hope through this sort of brief overview and primer to demystify some of the concepts and lingo that we use in the world of conservation finance. So conservation finance fundamentally refers to exactly what it sounds like. It's investments, it's finance in projects that provide habitat and biodiversity or other environmental benefits. So this can be in land, water, natural resource management practices. They can also preserve or increase green space or otherwise protect and enhance the provision of ecosystem services. It's just investments in conservation and natural resource management. So like any other form of investment, conservation finance can take the form of any number of different asset classes that we see in more mainstream or traditional finance, ranging from grants and appropriations that do not require a repayment, to debt, to real assets, to equity. And similarly, we see conservation finance vehicles coming into play in different types of structures and mechanisms within each of these broad asset classes. So grants and appropriations that can come from either government or philanthropic sources. Debt can take the form of a few different mechanisms, including loans or notes, as well as municipal or corporate bonds that are publicly issued and traded. Real assets, typically in a more traditional finance context, when we talk about real assets, we're talking about real estate investment, but in a conservation finance context, we're typically talking about land acquisition or easements that can promote working forests or working farms, for example. And then finally, just like mainstream finance, when we talk about equity, we can think about both private equity in companies or specific projects, as well as public equity in publicly traded securities. And just to put a finer point on that, when we're talking about conservation finance and how these mechanisms work in a conservation finance setting, you may also see different types of terms thrown around. For example, the idea of green bonds is essentially just any municipal or corporate bond that has been labeled and certified for a green purpose. And again, when we're talking about real assets, often we're talking about sustainable timber or agriculture rather than investment in buildings or real estate. Another term that you may see thrown around is the idea of ESG, or environmental social governance. This term refers particularly to publicly traded securities, taking the form of publicly issued green bonds that are either municipal or corporate, as well as public equities. in conservation finance, we also often see examples of blended finance, that is combining different sources of investment capital, and particularly with the inclusion of government or philanthropic grants, because we know that investing in nature, investing in ecosystems from a pure financial return perspective may not be as attractive to an investor as other forms of investments. But by including grants and appropriations from government and philanthropic resources, it can be a way to increase the overall return and make it a lot more attractive to investors. So that's one of the reasons why we often see conservation finance deals taking the form of blended finance, combining a few of these different mechanisms together. So also wanted to illustrate how everything besides grants and appropriations, all the different mechanisms that you see here, they do require some source of repayment. And so typically that's coming from public funds, sales of environmental credits, for example, carbon or species at risk, or wetland mitigation credits, as well as private revenues. You may also see the term nature-based solutions or investment in nature-based solutions, and those are typically referring to projects and investments in projects that are actually generating and selling these types of environmental credits. Okay, so in my introduction, I mentioned that we particularly specialize on what we call outcomes-based financing, and essentially what we're doing is just layering on to this entire framework that we've now built up. We're finding additional sources of capital to help either repay investments in environmental projects by being able to monetize and create contracts to sell other environmental or social or health or economic outcomes that may be outside of traditional or established environmental credit markets. And it's all enabled by a third-party verification and reporting mechanism that is a key to all of the deals, all the projects that we work on, and being able to have an objective validation of what was the impact of the projects that was created once they went into place. For example, if we're talking about green stormwater infrastructure in cities, it's how many gallons of stormwater were successfully managed through the projects that went into place. How many tons of carbon were actually sequestered, how many new visitors do we have who are using this outdoor recreation infrastructure. And then a final piece of the outcomes-based financing approach, besides looking at new ways to secure outcomes-based payments, besides the third-party verification and reporting, is the fact that in a lot of the deals that we work on, we're actually tying repayment terms of the various investments that we're working on to that outcomes verification. So for example, we've closed now a number of environmental impact bonds, which are municipal bonds publicly issued to finance green infrastructure in cities across the United States, where their repayment on the bond, rather than being just a set rate of repayment, can actually be tied to the results of a third-party verification that's actually demonstrates how many gallons, for example, of stormwater were actually captured, with the understanding that through an economic analysis, we're able to understand what the benefits of these outcomes are to either the issuer of the bond or any other stakeholders that may be represented in these transactions. So, to put a finer point on some of the benefits of using this outcomes-based approach, again, that's all driven by a third-party outcomes verification reporting and backed by a cost-benefit analysis beforehand, illustrating what we expect the benefits, the economic benefits to be of these various positive environmental, social, health, economic externalities that may not be factored into these projects and how they're funded already. It enables access to new sources of investment capital, particularly from impact investors and ESG investors who are increasingly getting more sophisticated with their demand to actually see reporting on what was the impact that was produced by my investment. A lot of green bonds have traditionally been use of proceeds only, meaning that an issuer says, I'm planning to use the funds for this green purpose. But often there's a lack of reporting afterwards about what actually happened. investors are increasingly demanding that kind of outcomes reporting and analysis and verification through the ability to tie repayment terms to the successful achievement of outcomes. It's a way to transfer the risk that innovative projects are actually going to perform and achieve their environmental or social or health or economic goals. It's a way to showcase partners in their projects, attracting internal and external support, because there is this outcomes evaluation that is fundamentally baked in. So it's a way to showcase the impact that the projects are having, as well, in addition to the fact that these are innovative types of investments. It's a way to engage and coordinate diverse and new stakeholders that may benefit from projects. Our approach is to look at the full range of benefits that a project may produce, and think holistically and sort of outside the box of who's not at the table already, who may benefit from this, and who may be compelled to participate in a transaction based on paying on a per unit basis of a particular environmental or social or health or economic outcome that they value. And we'll get into an example of that. Fundamentally, it's a way to measure and track outcomes through the embedded performance evaluation. And finally, by doing that, by measuring and tracking outcomes, it can help inform future project planning purposes and funding, as well as establish external accountability structures that foster commitment and support sustained partnerships, and demonstrate accountability to the public. Okay, so with that, wanted to go through a couple of examples of work we've done elsewhere using this outcomes-based financing approach. And the first example I'm going to go through is in Southwest Colorado, working around the San Juan National Forest. This is an area that has faced a significant wildfire risk. There was a major fire that took place there in 2018. And while the National Forest system itself is doing some work on the land to mitigate risk of wildfire and do forest health treatments, there's sort of a lack of coordination in being able to look beyond those jurisdictional boundaries and look at the region as a whole, and the wildfire risk that it faces, to be able to come up with a program that can actually meaningfully address that risk, recognizing that it's fine if the National Forest is doing some work within its own boundaries, but if that work is not being done across the border on privately held land, from a risk perspective, that only mitigates the wildfire risk to only so much. So there's a lack of coordination at the moment, and a lack of funding to be able to support a large scale, regional scale wildfire mitigation program. But we see an opportunity in being able to bring all the beneficiaries of wildfire risk mitigation in this region together. We're working with a city government, a county government, we're working with the electric utilities, the water utilities, we're working with some of the tribal governments, as well as state and federal agencies, to all come together to support a new revolving fund that would pay for forest health treatments to reduce risk of wildfire, and then be repaid back over time by that coalition of different beneficiaries. At the same time, we're looking to support the local biomass industry and commercializing some of the material that's taken off of the forest through this risk mitigation work, as well as work with individual landowners to evaluate what they may be able to contribute to this revolving fund. So essentially, we're looking at a regional scale, and we're connecting to different beneficiaries of this risk mitigation work to come together and pool their resources and improve coordination, to be able to support a $44 million revolving fund that will enable treatments to be implemented and continue over time. Another example is our work in agriculture, and we've actually spun off a subsidiary company that is now implementing agricultural best management practices that provide a number of different environmental benefits. And so we all recognize the benefits to water quality, to carbon, to other based on other environmental outcomes of doing improved and more sustainable agriculture. But before we started, there was no one who would be able to pay, or there was no way to fund that kind of work, and there was no incentive to the farmers to implement these best management practices. So what we did is, we're looking again both at established environmental credit markets like carbon, and secured a contract with Cargill and with other large agribusinesses to pay for credits generated from enhanced carbon sequestration in the soil through these agricultural management practices. That's not enough to support repayment to investors of this work. But then we combine that with outcomes-based contracts that are, outside of the carbon markets, outside of these regulated environmental credits, outcomes-based contracts with downstream municipalities in Iowa and across the Midwestern United States who are interested in the water quality benefits of these same agricultural management practices, based on the fact that they have to manage total maximum daily loads of nitrogen and phosphorus and sediment and other water pollutants. It's actually cheaper for them to pay farmers upstream to reduce the loading of those nutrients at their source than it would be for them to pay for upgrades to their gray infrastructure treatment control facilities within the municipalities. And at the same time, by structuring outcomes-based contracts that enable them to pay on a per pound of phosphorus removed, per pound of nitrogen removed, per pound of sediment removed basis, it enables them to transfer some of the risk, again, that these projects are actually going to perform and deliver the water quality impacts that they want to the investors and to the farmers. So they're only paying based on how much nutrients were actually avoided going into the watershed that they would otherwise have to treat or upgrade their water treatment control infrastructure in order to meet their TMDL regulations. So we started this in Iowa, and now we're working across the state. But again, the theme here is that the carbon alone was not enough to support a return on investment to the investors. Neither was the water quality, but by looking again holistically at these projects and combining those outcomes-based payments together, we're able to find sufficient repayment capital to support investment in these sustainable agricultural practices. The last example I'll give is also through our work with the U.S. Forest Service on a different national forest in Southeast Ohio, in the poorest region in the poorest county of the state. The forest there, they had plans for an 88-mile mountain biking trail system, but given the U.S. Forest Service budget is going pretty much solely to either wildfire suppression or wildfire risk mitigation activities, there was no way to pay for this project. It sort of sat on a shelf. But we saw this project and we saw an opportunity to create economic benefits to the region, again, which is impoverished, by promoting tourism and visitation and use of what we expected to be a premier national mountain biking trail system. So the national forest didn't have the resources to pay for it. They also can't take on debt to be able to get the funds to pay for it and then repay over time. There's benefits to the local communities. And so what we did was we brought everybody together by articulating the expected economic benefits to the region, as well as benefits to health, connectivity, and supporting funds for environmental restoration and conservation in the forest, to bring everybody to the table together, get them to formalize their partnership by forming a council of governments, which then made them a lot more attractive for state and federal grants to support the project, and B, combine their resources, what resources they had together, to be able to support then private financing to support the final piece of the $11 million project cost. So here's sort of an illustration of what that looks like. The full project cost was $11 million. By formalizing that partnership, by formalizing a council of governments in the region dedicated specifically to outdoor recreation, and stating clearly the goals and the expected benefits of this project to the economic development of the region, it enabled the city and the county, as well as some smaller villages near the trailheads of this project, to come together and secure more state and federal grants. Some are expected to come this year. And then the remaining portion could be provided by private financing to provide that remaining upfront $2.5 million for the project, and be repaid by a portion of the expected increase in local tax revenues and other economic benefits that are coming to the communities, ensuring that they now have an efficient, collaborative way to help pay for this project that is expected to have a large impact to the region. Okay, so taking this to our work on Phragmites, we know that invasive species management is expensive and fragmented. Municipalities and conservation authorities in Ontario spend around $50 million annually managing invasive species. The annual impact of invasive species in Canada is around $20 billion for the forest sector, $7 billion for aquatic species in the Great Lakes, and $2.2 billion for plant species in the agricultural sector. And at the same time, while there's a significant impact of invasive species in Ontario and across Canada, there's few tools to be able to control and manage these populations. These interventions need to be repeated over 4 to over 10 years to achieve eradication. And while we recognize that individual communities, individual municipalities, individual organizations are doing work already and scaling up work to manage these Phragmites populations, we see sort of a missed opportunity in not fostering a greater coordination among these stakeholders, formalizing these partnerships and collaboration, and thinking about a larger scale that can then potentially invite the interest of provincial and federal government, as well as private sector entities, to support this work in some way, either by providing some of the upfront capital needed, or paying based on the outcomes that they enjoy from the projects. And at the same time, like in the Ohio example, our hypothesis is that by formalizing these types of collaborations, this work can be a lot more competitive than for available grants and resources. So our vision for Phragmites control and management via an outcomes-based financing approach is, first, to develop a multi-year landscape and regional level integrated Phragmites management program focused on both prevention and eradication. This program would be enabled by a collaborative outcomes-based financing structure, which would ensure that the beneficiaries of Phragmites management efforts pay based on the outcomes that they care about. And as Sarah mentioned, this is now the last in our webinar series, but we've already talked to municipal government stakeholders, private sector stakeholders, conservation organizations, provincial government stakeholders, as well as homeowners and cottagers associations, and other expected beneficiaries of this work. Again, it's our expectation that formalizing partnerships and coordination among these Phragmites beneficiaries could enhance competitiveness for philanthropic and government grants and other resources that can blend in with the financing. And it enables these beneficiaries to pool their resources, and by bringing multiple stakeholders together, it ensures that the financial burden for this work does not fall on any one entity alone, and facilitates a better coordinated, more efficient, and larger scale effort. Again, given the pervasiveness of the spread of Phragmites in Ontario and across Canada, similar to that wildfire example, we see sort of a benefit in terms of potential economies of scale and efficiency, in ensuring mitigating the need to have to go in and retreat these areas over time, if we're controlling the spread and controlling populations at a large regional scale, rather than just treating it in one area and having it be repopulated from another geography close by. Okay. Sorry. I think there's a lag here. Okay, so to put a finer point on our approach, again, we know the costs of Phragmites management are high, but we see a wide range of benefits that accrue from this Phragmites management work, including to property values and therefore property tax revenues, increased tourism and recreation, enhanced road and traffic safety, given the risks that Phragmites population around roadways present, reducing risk of fire and power outages, improving stormwater management and watershed health, improving habitat and biodiversity, increasing agricultural production, and increasing ecosystem services, and as well as providing insurance benefits given some of the risks of Phragmites I just mentioned. So the costs of the program are high. The benefits are sort of spread among a number of different beneficiaries. And so our approach is to look at these projects collectively, and rather than relying on any one beneficiary alone, to have to think about paying for the full cost of a regional scale program, a large scale ambitious program in Ontario. Our approach is to look at all these actors who benefit from these various outcomes of Phragmites management, and leveraging and coordinating their resources and efforts to ensure that a Phragmites management program is more efficient, evaluating and articulating outcomes, and thereby being able to demonstrate an economically feasible approach to finance and scale these projects in Ontario. So whereas beforehand, the benefits are sort of diffuse, it's on each municipality, each community right now on its own to pay for this work, or each beneficiary to pay for its work. And we see an opportunity in being able to combine efforts, pool resources, articulate outcomes that can then help secure new forms of impact investment capital to promote a large scale, regional scale Phragmites management program in Ontario. Our work on this project, we started in a phase 1 where we reviewed 3 different types of invasives, including Phragmites as well as aquatic weeds and Asian carp. We ultimately chose Phragmites as the species that we think might be most compelling for this outcomes-based financing approach, just based on the impact of these populations that we saw before, as well as the ability potentially to identify a number of different beneficiaries that could participate in an outcomes-based financing transaction. Again, Phragmites threatens all Canadian provinces and US states along the Great Lakes, and produces a number of negative impacts to recreation and tourism, wildlife habitat, infrastructure, stormwater storage capacity, agriculture, traditional indigenous use, roadways, property value, shoreline access, fire hazard, and in addition to degrading aesthetics and vistas. So there's significant impacts of Phragmites in Ontario and across the Great Lakes region, both on the Canadian side and on the US side. And again, we know that a lot of municipalities in Ontario are already doing work to manage these populations, but we see an opportunity to scale and coordinate these efforts to really address the issue at sort of a regional scale, and perhaps enable some of those kinds of benefits in terms of economies of scale when it comes to the cost of treatment or interventions, as well as economies of scale when it comes to ensuring that if we're clearing this area, that there's not just going to be a repopulation from an adjacent area in the next couple of years. So where we are now is sort of in this first part of phase 2 in the funding and financing strategy. We're working with ISC and NCC to design and control what the prevention program looks like, identify costs, quantify benefits, and develop the cost benefit analysis, identify the beneficiaries or expected beneficiaries of this work. And that's a lot of why we're doing this webinar series and wanting to hear from you how you see the benefits of this. And based on the feedback and the input that we get from these conversations, design an outcomes-based financing structure and approach. Ultimately, where we want to go is then in a second part of this phase to validate and refine the financing structure and approach with payers, investors, and implementation partners, and ultimately structure an actual transaction if we deem that the financing approach is viable. So now wanted to turn it over to all of you, or sorry, I forgot I had a couple other slides. Wanted to present some of the initial results of the Green Shovels Collaborative and our work in being able to build off of this cost benefit analysis. Again, we know that the cost of Phragmites management is high. This is the estimated cost across different land types, highways, rural roads, and wetlands. But we expect the benefits and the scale of benefits to be significantly larger. Again, looking broadly at the types of benefits that we're talking about, ranging from agriculture to road safety, to property values and taxes, to wetland benefits, and a number of different environmental, social, and economic benefits. So our hypothesis is that we'll be able to leverage the positive benefit cost ratio of this work to be able to tap into a broad range of stakeholders and payers who care about these various benefits of Phragmites management, and be able to pool resources and fund and finance this project at scale. So with that, wanted to lead into the discussion section and turn it over to all of you attending this webinar. I have a couple of guiding questions here, but curious to see. I haven't been monitoring the chat. I'm not sure if any questions have come up there. But the questions that we're interested in this are first, if there's any questions or clarifications on conservation finance broadly, or the outcomes-based financing approach. Learn from you, what would a greater scale and more coordinated Phragmites management program mean to you and your organization? How do you view the benefits? Where are you investing in Phragmites management already? What are the gaps? What are your priorities for future Phragmites management programs? How do you typically fund or finance invasive species management or other conservation or natural infrastructure projects broadly? And how can we connect to financial decision makers within your organization? And finally, what are your reactions to a proposed regional scale, collaborative, and outcomes-based financing approach for Phragmites management? And are there any precedents that we should look to or considerations we should be aware of?